Management Office, DMO, seeks 450 billion naira through a bond auction on April 15th. Now, this contributes to their 1.8 trillion target for FGN bonds in the second quarter of 2024. The DMO raised 2.39 trillion naira in the first quarter, with interest rates reaching 20.45% in March. Now, recall that the Nigerian government previously used 4.83 trillion naira from Q1 2024 NTBs and bonds to settle central bank advances. I'm now joined by Oladipo Ajayi, the head fixed income and forex at Chapel Hill Denham. Thank you, Oladipo Ajayi, for joining me today. If you can hear me, can you hear me?
Thank you very much for having me on this morning.
All right, Joe, I can't really hear you very well, but I suppose you can hear me. So let's start. I guess that will get better along the line. Now, this is another one, another debt, and we're not sure, to what use this amount will be put. Should we be bothered at this point? Mr. Ajayi, if you can hear me, I'd like you to probably let me know. Okay, I guess we're having a technical issue right there. Well, we're talking about the DMO seeking to raise 450 billion naira from, bonds, definitely. If you can hear me, I'd like you to confirm.
Yeah, I can hear you clearly now.
Okay, so I was saying this is another one. Another money to be borrowed, and we're not even sure to what use this amount will be put. So should we be bothered at this point?
Well, sincerely speaking, this is still in alignment with what is in the budget for the year 2024. At the beginning of the year, the government drew the budget for the year, and on the budget sheet, we have budget deficit of over close to 9 trillion that we need to raise in the market. And out of that, about 7.8 trillion will need to be raised in the local market. And between January and now, the DMO has been able to raise about 2.3 trillion in the market. So it's just in continuation of the program for the year. So it's still not out of place. It's within the budget for the year.
Well, talking about that, I want us to pay attention to this particular one. That's because of the minister's statement where he was saying that the federal government allocated approximately 4.83 trillion naira from the proceeds of NTBs and, even bonds issued in Q1 2024 to settling of the ways and means advances from CBN. Now, for clarity, okay, before we get there, I'd like you to probably speak to this because I had to raise this because of what you said. This is debt repayment, or even if it is debt settling.
Well, if you look at truly between January and now, the DMO has raised over 5 trillion in the short end of the market, and it's been clearly stated now that is actually to settle ways and means. And we all know that the current CBN governor has highlighted and made it clear to the government that he's not in any business of actually extending loans in form of ways and means to the government, except they can actually clear the outstanding ones or currently on the ground. And that's one of the reasons why the government was actually very aggressive in the market in Q1. And to be realistic, when you look at it from that perspective of what happened last year, where we actually had to add about 23 trillion to our total debt for the year. And with what is currently happening now, of course, it calls for concern because how long will we continue to actually use ways and means as a way to actually raise money? And at the end of the day, we ended up now accumulating debt through that window. And we'll then have to add it to the total debt of the country. So when you look at it from that perspective, it called for question and on that regard, that what is the strategy of government around that? But I think the kudos will have to be at the doorstep of the current CBN governor, who in his own might felt that no, he's not going to allow that to continue. He's not going to continue to actually extend unnecessary funds to the government. So by so doing, it simply means that there will be clarity around the fund being borrowed by the government. So it's not going to be aftermath that the people will not be aware of the outstanding loans that the government has drawn down from the central bank. when it has been fully utilized. So I think on the part of that is a good one. But when you look at it from the perspective that we continue to amass loan from market, from the central bank, of course, it calls to question to the fact that how long we will continue in this line, knowing fully well that in no time we will likely get to a level where we might not be able to actually service our debt obligation if we continue to throw caution to the winds.
Going, how close are we to that time? I remember what you said when I asked you the first question. You were talking about, this being in line with the borrowing plan, about what we have in the budget deficit and all of that. So, I mean, talking about the budget deficit or looking at the budget, did the budget specify that, a particular amount of this deficit or of this borrowing will be spent on maybe servicing ways and means and all that?
The ways and means is not actually part of the budget. So the area, that aspect that we spoke about, the borrowing from the treasury bills market is totally out of it. The 4.8 trillion that I was mentioned is totally out of the budget. It's not actually included in the budget for the year. Of course, at the point in time, the government has it at the back of their mind to continue to actually roll down on some of the obligations of the ways and means, but actually borrowing close to about 4.8 trillion in the market to service or to reduce the obligation of ways and means is not clearly stated in the budget for the year 2024.
All right, moving away from that, I want us to begin to look at some of those things. When we talk about bonds and all of that, the monies realized from bonds are actually supposed to be, used for infrastructure and mega projects. And some analysts have said, this is aimed at boosting the country's credit worthiness. But is that what it is, or are we probably postponing the doomsday? After all, we're even borrowing to pay back another loan. Does that look good to you?
I think the main thing is about what are we using the fund for. That's the main concern. And another thing also is our capability to actually service those obligations and also pay down as a when due. I think where I will be more worried is when we continue to amass debt and we are finding it very difficult to service an obligation. At that particular point in time, it tells you that we need to do more than what we're doing. And my view remains that when you compare our debt structure with other African countries or other some of our peers, it's not about the debt itself, it's about our revenue generating capacity. When you look at debt to GDP ratio, we are still around like a 40%, and that's one of the lowest among our peers in Africa and globally. But the concern is we are not growing revenue. Of course, we've heard this current government saying that they want to reduce our cost of servicing debt to revenue to around 45% compared to where we were last year. At the point in time last year, Q1 last year, we are around 98%. And so it is not about the debt itself, it's about the capacity to actually service the debt that actually matters. So I think we need to actually work around improving our revenue generating capacity as a country. And when we work aggressively in that regard, it will reduce the number of times that the government will come to the market to come and raise funds. And at the same time, it will also help the government to meet our obligation as a when due, rather than coming.
All right, you're talking about, how that revenue is actually very important. So we don't have to, or we don't get to see the government coming to the market every now and then. But looking at what's been happening so far, we see that government is beginning to use, higher rates, and these higher rates tend to attract foreign investors who are, of course, seeking better yields. And this, of course, leads to an inflow of foreign currency, which can help stabilize and potentially strengthen the naira. I mean, when we look at all of this, the policy stance of the CBN, these borrowings and all of that, some persons would say, you know what, I mean, on the one hand, we're sort of passing a message that, we're credit worthy. That's by paying this particular debt we're talking about. And then on the other hand, we are bringing in foreign inflows, and that, of course, is also helping to stabilize the naira and all of that. But really, for how long can we continue like this, knowing that when it comes to, the revenue side of it, we're not doing so well? And we also know the implication this has even for banks, for the private sector, because when you mop up this liquidity that you're borrowing and all of that, I mean, the banks are probably left with not so much to give out as credit, to the real sector. What are your thoughts on this?
found ourselves, we need to make a decision, and the decision we have made currently is to actually fight inflation, and also salvage naira. And I think one thing we also need to understand is that it's when we have a nation, that's where we are talking about this other aspect. We are seeing what's happening in Venezuela. We'll see what's happening in Argentina and some other countries like that, where they are currently battling aggressive inflationary pressure. And I feel that currently what the government is currently doing, basically the monetary policy guy, I think is the right thing to do currently. We need to first of all salvage the country. We need to first of all salvage the currency, and at the aftermath, we will now have to start seeing more like a moderation around that.
Mr. J, let me come in here.
Expressly stated there was a forward guideline in that regard at the beginning of the year, where the CBN governor, and coupled with the Minister of Finance, actually reiterated and made it clear that H1, that is, they expected elevated rates in H1. And they said by H2, they feel that by then, I would have been able to stabilize the currency, and as at that particular point in time, rates will start dropping. And that is exactly what we expected to see by H2. As we speak currently, rates, okay, for example, the forthcoming bond auction, we don't expect rates to be as elevated as what we saw in the month of March, because currently we are seeing more of aggressive interest, both from offshore and also from domestic buyers in the market. So we feel that this will affect rates in the month of April, and we will not see yield, most especially on the 2034 maturity. We don't expect to see over 20.45 that we saw at the last auction. We expect to see rates to actually moderate down, maybe to around 20% at that in the forthcoming auction. So by the time we get to H2, we expect rates to moderate, and that particular point in time, corporate organizations will now have opportunity to actually come to the market to be able to raise debt at a reasonable point. But as we speak currently, the main focus of the government is to salvage the currency and also to find a way to actually moderate inflationary pressure.
All right, let me come in here. There are some analysts who have talked about, the need for a balance. You're talking about, wanting to salvage the currency, wanting to ensure that we have a country. And on the other hand, there are people who are saying that, you just have to find a balance some way. You can't have the monetary policy tightening everything, making liquidity, making things difficult, for the real sector. And then on the other hand, you're expecting things to be fine. You also, I remember you talked about, sustainability really. How can we really sustain this? For how long can we continue like this? And everybody's talking about, very soon things are going to moderate. Is this a given? Will things just moderate, just like that, when we haven't necessarily seen so much from the fiscal authority? Just this morning, we're talking about Nigeria dropping from, being the highest producer of crude oil for the month of March. I mean, that doesn't speak good, of what we're doing from that end. What are your thoughts on this?
Like I said earlier, I expect moderation, and between you and I,
but we're not seeing it yet, are we? I mean, we're not seeing a corresponding action from the fiscal authority.
Yes, I agree with you. But what I'm currently talking about is about the monetary policy side. We're already seeing the impact of their decision. We have been able to see the impact of their hawkishness in the market. We've seen Naira actually climax at the unofficial market around 8,900. Currently now we're around 8,200, and this as a result of the aggressive decision of the monetary policy guide. And just like what you said, I agree with you that the fiscal policy guys also, they need to actually rise up to the challenges. And for now, a lot of people have not been seeing the full impact of the fiscal policy guides in the market. Like you mentioned, we expect Nigeria to increase oil production rather than to continue to actually reduce the level of production that we are currently actually pushing out to the market. It simply means that on a daily basis, let's even take a benchmark of like 1.7 million barrels per day as our benchmark. As we speak, it means that we are living close to about 500,000 barrels on a daily basis on the table. And this is not what a country that needs to actually salvage or aggressively salvage the economy it needs to do. We need to do more around that. And aside that also, because we don't also need to just focus on only oil revenue. We also look at a way to actually ease up exportation. The days of actually spending months before you actually get to export things from the country need to actually come to an end. We need to find a way, a seamless way where people can actually export products with ease, and also where the revenue of such exports will actually come back to the country so quickly. And that is some of the things that we need to do. And the ease of doing business, and some of these things are on the table of the fiscal policy guide. So I think that the part of the fiscal policy guide, I will not necessarily score them high on this regard. They've not been doing extraordinarily well. I think the impact of what we have been seeing in the market currently is basically the aggressive action on the part of the monetary policy guide. So the country is also waiting for the fiscal policy guide to actually step up their game to ensure that we can see the full impact of this policy on the economy. As much as the monetary policy guide is actually tightening, we expect policies from the fiscal policies guide that will help to actually reduce the impact on the general populace.
I'd like to say this because we're pressed for time. We're pressed for time, so I'd like to, put this in there. Now, we're talking about development financing. I mean, have we seen this so far? There is this supposed 1 trillion naira intervention fund with about 500 billion naira for multi-sector funding, 200 billion naira for agriculture, 50 billion for nano businesses, and then the 200 billion naira for SMEs. I mean, has this intervention hit the economy? How soon do we need it? How soon is it going to hit the economy, and what will be the impact? That's on the one hand. But I also want to attend to something you said earlier, talking about, the monetary authority doing so well and stabilizing the naira. On the one hand, we have foreign portfolio investors who are coming in, and that's a good one. On the other hand, we have the naira also stabilizing, but then we also have depleting foreign reserves. What's the connection?
Yeah, if you look at the foreign reserve, let me correct that firstly. If you look at where we closed last year, the reserve closed around 32.9 billion thereabouts. And currently we are above, we're around 33.8 billion.
And we're at 34 at some point.
So normally you expect, one thing about reserve is not meant to sit there for decoration. Reserve is meant to actually, because the duty of the central bank is not just to actually amass the reserve or to continue to build buffer. When you build buffer, what do you use it for? What you use it for is that when there is need for liquidity in the market, you come in for intervention. And I've actually corrected it often time on here that we are not currently running more like a full floating system. We are running more like a managed floating system. The managed floating system is a system whereby when the government sees that, or when the central bank sees that naira is heavily underpriced, they will step up into the market and actually push liquidity into the market to help actually stabilize the market. And that's exactly what we've been saying. We are please don't let us expect to continue to see reserve increasing without us seeing liquidity in the market. That is nothing. That means the central bank is doing nothing around that. As much as you are building your reserve, you need to also continue to push liquidity in the market, and that's exactly what has happened in that aspect.
All right, thank you so much. We just have to we just have to end the conversation. Yeah, of course, you've made the point. You're talking about the fact that what we have is a managed float and not a free float where we just allow market forces to take charge. At some point, the CBN is expected to come in and intervene, where necessary and all of that. Yeah, point taken. Thank you so much for your time.
You're welcome.